You want to buy a home, but before you sign that contract and get your keys, did you know you have to pay for appraisal fees, escrow fees, inspection fees, and even title fees? And these are fees assuming you pay in cash, which is only 20% of all home purchases. So statistically, 80% of you will be getting a mortgage and paying for additional fees such as credit report fee, document preparation fee, and loan origination fee. Is your lovely new home going to be located in a private community such as a fancy suburb or a condo building? Guess what? There's a fee for that. It's called HOA fee. There are also miscellaneous fees such as audit fees, messenger fees, notary fees, overnight fees, and many more. Are you tired of the word fee yet? I'm surprised they don't charge us for a fee for just existing. Oh wait, they do. It's called taxes. We'll get to that in a moment. All these fees I just listed are called closing costs, and they make up 2 to 5% of your home's purchase price. So if you're buying a home for $500,000, don't be surprised if you get slapped with a $25,000 bill of fees. Sorry, I meant closing costs. Now, if you don't have at least 20% of the purchase price as a down payment, maybe because of all those fees you had to pay earlier, you have to pay for private mortgage insurance. PMI is a recurring payment you make to your lender in the event that you default on your mortgage. PMI is essentially a penalty payment you make to your bank or lender because you don't have at least 20% equity in your property. But once you have 20% equity built up, you can have future PMI payments canceled. You'll also be paying for homeowners insurance and possibly earthquake insurance, flood insurance, sewer insurance, and more depending on where you live. Insurance helps protect your home and possessions from accidents, natural disasters, and other risks. You should know that if you ever file a claim with your insurance company, they will increase your insurance rates because they think you're more likely to file another claim in the future. Fun fact, the United States is the only country in the world to offer a 30-year fixed rate mortgage as its primary mortgage. Most countries offer adjustable rate mortgages, so the amount you pay over the course of the loan changes depending on interest rates and other factors. This includes our neighbor, Canada. We may not have affordable healthcare, but we do have 30-year fixed rate mortgages. During your first few years of home ownership, over 80% of your mortgage payment will be going towards the interest cost alone, and less than 20% would be going towards equity. You own less house than you think you do because the bank wants to get paid first. That's called amortization, and here's a graph showing how your mortgage payment is distributed. You can see here that after you've completed 18 years of mortgage payments, only then will your payments mostly be applied to the principal. We talked about home insurance earlier, but that doesn't really prevent intruders, so you'll probably also be paying for home security. Depending on where you are and how big your home is, home security equipment and installation can cost $200 to $600, and you'll also have to pay a monthly subscription of $25 to $50 for monitoring. Now, the bigger the home you get, the more it will cost to cool and heat it. And you'll be paying for utilities such as electricity, trash, gas, sewage, and water. Did you know a lot of these companies charge an activation fee? These can easily add up to over $100. If you plan to live in a house, then you also have to pay for lawn care and snow removal, unless you do it yourself. In most places, you get fined if your lawn isn't well taken care of, or if your sidewalks haven't been shoveled. Now, when you move into your new home, are you going to keep every single characteristic of the home that the previous owners left you? Or will you be doing some minor renovations such as painting, flooring, and maybe even upgrading the appliances? That's another cost to add to the list. Maintenance and repairs are other ongoing costs of home ownership. Things like landscaping, painting, and even pest control can quickly add up. And more major repairs such as replacing an air conditioning unit, the furnace, or even the roof can be very expensive. Property tends to appreciate over time. As the value of your home increases, the property tax you pay will also increase. When you finally decide to sell your home, you must pay for closing costs again, and now also pay for real estate agent fees. This can add up to 10% of the purchase price. So if you're selling a $500,000 home, you could be paying up to $50,000 in realtor fees and closing costs. Speaking of fees, in this video here, I tell you exactly how you can get around paying credit card fees.